Traders work in front of the German share price index, DAX board, at the stock exchange in Frankfurt, Germany, August 9, 2017. London, Reuters. European shares rose on Monday after geopolitical tension had sent them to their worst weekly losses of the year. The Pan-European Stoxx 600 rose 0.8% while Eurozone stocks and blue chips Stoxx 50 jumped 1%. Tension between the United States and North Korea sent them 2.7% lower last week, their worst weekly loss this year. The banking sector SX7P, the worst hit last week, led gains, up 1.5%, with Deutsche Bank, DB KGaenda, Commerzbank, CB KGaenda, and Standard Chartered Bank, STANL, all up 2.7 to 3.4%. Financials are a high beta sector, so whenever there's a market sell-off they do worse, said Carolyn Simmons, deputy head of the UK investment office at UBS Wealth Management. You get these reversals afterwards, the pickup in volatility is reversing and cyclicals are gaining. We're seeing a return to fundamentals, which we think are quite good. The Stoxx V2 Texas, Europe's main gauge of equity investor anxiety, was down 13% at €16.8, erasing all of Friday's spike and still near historic lows. Fiat Chrysler shares jumped 3.5%, leading auto stocks, with a trader citing an automotive news report saying large Chinese automakers were looking to acquire the Italian company. Danone shares gained 1.5% after the New York Post newspaper speculated the firm could be a bid target. A spokeswoman declined to comment on the report. Shares in German energy group RWE, RWE, rose 1.5% after it said 2017 profits would be near the top end of its forecast after first half results were boosted by better gas plant performance. RWE has led European utilities SX6B this year, up 60%. Broker reports caused some significant moves as well. UDG Healthcare, UDGL, fell 3% after Liberum analysts cut their target price on the stock, while travel company TUI, TUItel, jumped 4.3% after Credit Suisse upgraded it. UK mid-cap Ladbrokes Coral, LCLL, was among a handful of fallers, down 2.7% after Credit Suisse cut the stock to underperform from neutral. With 82% of MSCI Europe Corporate's quarterly results through, energy and basic materials stood out as the winners so far, while consumer cyclical and industrial companies have mostly missed analyst expectations, Thomson Reuters data showed. Industrials were also a weak spot among Eurozone companies, which Simmons said were on track to post more than 10% earnings growth this year. Many brokers had warned a stronger euro could dent performance for Eurozone exporters. The currency has had a little bit of an impact, but I would not overemphasize it, Simmons said. If the euro continued to strengthen it could be more significant, but for now there's enough growth going on to offset it, she added. What do you think about this news? Scroll down and comment. Thanks for watching. Please subscribe. Goodbye and see you again.